Hey guys, and welcome to the Working Money Channel. So here we have it from BlackRock. BlackRock says, get ready for a recession unlike any other, and what worked in the past won't work now. So we've got a heavy hitter here now, BlackRock, saying that we, the plebes, need to watch out. A worldwide recession is just around the corner as central banks boost borrowing costs aggressively to tame inflation. And this time it will ignite more marketplace turbulence than ever before, according to BlackRock. The global economy has already exited a 4-decade era of stable growth and inflation to enter a period of heightened instability. And the new regime of increased unpredictability is here to stay, according to the world's biggest asset manager. Now, if BlackRock is saying this, I think that they are likely telecasting what they know is already baked in. And so, guys, don't be surprised if this happens. And I mean, we've been worried, or worried is the word. I don't know. This has at least been on our radar for the last several months, if not over that. And, I've been hedging accordingly. I have been buying some precious metals, obviously, boosting my positions of cryptocurrencies as the market has come down. I'm trying to lessen my exposure to fiat currency. Let's keep going here. So that means policymakers will no longer be able to support markets as much as they did during past recessions. A team of BlackRock strategists led by Chairman Philip Hidbrand, this is what they wrote in a 2023 report. Here's a quote, guys. Recession is foretold as central banks race to try to tame inflation. It's the opposite of past recessions, they said. Central bankers won't ride to the rescue when growth slows in this new regime, contrary to what investors have come to expect. Equity valuations don't yet reflect the damage ahead. So, the equity market, are we going to continue to see a tumble? This is the S&P 500 on the daily, and you guys can see since early this year, January 2020, we have seen nothing but lower highs, which is not a good sign. Okay, lower highs and lower lows, all not indicative of a market rebounding. So that's the S&P 500, bringing up the Dow Jones Industrial Average. I already have a Fibonacci on here, and you can see since that bottom that we saw back in mid-October, we have actually retraced to the 0.702, and I know the blockchain backer has also talked about this, the 0.702, and if you follow his channel, you're probably very familiar with this concept. When we do see markets retrace back to the 0.702, it usually means a further decline is in the cards. So we've also got BlackRock saying this, which is not a good sign. Of course, you couple that with what is happening in cryptocurrency at the moment, and maybe this means that we are even in for more of a decline for crypto. Congressional subpoena for SBF definitely on the table. Okay, this is coming from Maxine Waters. So talking a little bit more about the, just kind of going into the FTX story a little bit, because this still is not over. Even after adopting a more assertive posture on Twitter, it did not appear that House Financial Services Committee Chair Maxine Waters intended to subpoena FTX founder Sam Bankman-Fried to testify before Congress on December the 13th. In response to such reports, however, Representative Waters posted to Twitter, a subpoena is definitely on the table. And guys, this is her tweet. Lies are circulating, CNBC, that I am not willing to subpoena Sam Bankman-Fried. He has been requested to testify at the December 13th hearing. A subpoena is definitely on the table, so stay tuned. Citing individuals with knowledge of the private meeting with the SEC Chair Gary Gensler early this week, CNBC reported that Congresswoman Waters told colleagues that she had no plans to compel the disgraced ex-CEO to come to Washington officially. According to anonymous sources, Waters said she would prefer to convince Sam Bankman-Fried to instead testify on his own free will rather than by subpoena. This would explain the almost friendly request on Twitter that the representative sent Sam Bankman-Fried on December the 2nd. And so the response on Twitter was, Sam Bankman-Fried, we appreciate that you've been candid in your discussions about what happened at FTX. Your willingness to talk to the public will help the company's customers, investors, and others. To that end, we would welcome your participation in our hearing on the 13th. So now U.S. Congress taking a bit of a different approach, okay? We're also seeing these kinds of articles now coming out. People are really wondering, will Sam Bankman-Fried go to jail for this? Because in any other circumstance, anybody accused or found guilty of doing what he did would certainly, in fact, go to jail. Well, attorneys say that if proven guilty, the founder might spend more than 20 years in prison. If Bankman-Fried does not appear for his scheduled deposition, he may be served with a subpoena. If the creator of the cryptocurrency exchange FTX does not testify at the two hearings scheduled for next week in Washington, he may be subpoenaed. if Sam Bankman-Fried doesn't voluntarily testify. He could, this seems like this paragraph is the exact same as this paragraph. Senate Banking Committee Chair Sherrod Brown addressed a letter to former FTX CEO Thomas Bankman-Fried on Wednesday, asking him to appear in person before the Committee on Banking, Housing, and Urban Affairs in Washington, D.C. on the 14th. And here's a quote, guys. "If Bankman-Fried does not testify, I am prepared, along with your ranking member, Pat Toomey, to issue a subpoena to force your testimony," Brown warned. Despite recently participating in a series of interviews from the Bahamas, Sam Bankman-Fried is under increasing pressure to come before Congress and explain the precipitous decline of FTX and the firm's problematic ties with trading firm Alameda Research. Alameda has used the money that FTX customers have deposited for trading purposes. And so, attorneys are saying that this could mean 20 years jail time. I guess now the question is, will Sam voluntarily testify? But the other thing I noticed is the fact that he's being so apprehensive. That to me means one of two things. Either, maybe there isn't some kind of backroom deal where he gets immunity and maybe he is on the hot seat and he could in fact go to jail. Or, of course, maybe the exact opposite. Maybe he's got a team of lawyers in the background scrambling to make some kind of backdoor deal to allow him to have immunity, testify, allow him to keep his dignity. We don't know. What we do know, though, is that this has definitely affected the crypto market. And coupled with what we are seeing, across the world, BlackRock's warning saying, markets could tumble even further. Well, this is definitely tailwinds that could suggest that cryptocurrency will fall further as well. And so, I got to address this from Sasha Hodder here on Twitter. How did Ripple build such a loyal army with a chart like this? Well, Sasha, I got to say, context is everything. Matt Hamilton obviously responding to this. That is a chart of XRP, not Ripple, first of all. Second of all, you can pick whatever time frame to suit whatever narrative. Over a long enough time frame, XRP is pretty much on par with Bitcoin. And number three, of course, most people invested in XRP are interested in actual utility, not just the Ponzi-nomics of something like Bitcoin. So perspective is everything. And, a lot of people responding to this tweet thread here in the XRP community really just ready to tear a strip off Sasha Hodder. And so you stepped right into that one, Sasha. I mean, considering Ripple is one of the only companies that has as many partnerships as it has, one of the only companies in crypto, at least. This one from Mike Manfield here. Okay, Veeam's partnership with Ripple partner Finastra enables banks and other financial institutions to offer innovative payment services for SMBs leveraging automatic electronic invoicing and bill pay capabilities. So we're seeing more use cases, guys. It's just another one, okay? Veeam's AP and AR services may be accessed directly through Finastra's Fusion Digital Banking. And again, Finastra is a Ripple-enabled company where users can navigate seamlessly to Veeam's payment network and perform their transactions. Here's just a quick quote. "As the world continues to digitize and innovate like never before, it is critical that businesses have the tools they need to be efficient and react quickly to the needs of their customers. We're pleased to work with Veeam to make it easier for banks to offer enhanced AP and AR services for their customers through Fusion Digital Banking." So just another example here of a Ripple partner partnering up with another corporation, Veeam in this case, in order to provide better banking services. So thanks to Mike for posting that. Also, this one, guys, from the Wrath of Kahneman. And, there are entire regions of the world that are Ripple enabled. The Middle East has been one of the biggest ones to grow over the last year or so. Al Baraka Bank has become the first bank to sign onto the SADAD Bahrain platform, a platform which is Ripple enabled for, among other things, remittances to UAE exchanges or ICICI India. So AIB Bank, or Al Baraka Islamic Bank, one of the leading Bahraini financial institutions in the field of Islamic banking, has recently signed a joint cooperation agreement with SADAD Bahrain, the leading company in the field of financial technology for electronic payment systems. This agreement is the first step towards providing innovative banking services that would elevate the digital customer experience. Elaborating on the bank's new strategic partnership, the CEO of Al Baraka Islamic Bank said, "I am pleased to announce that we are the first bank in the kingdom to cooperate strategically with SDAD Bahrain as part of our continuous endeavor to enhance our banking services to meet the needs of our customers in light of the digital transformation strategy." So, a lot of these CEOs, a lot of these banking heads, they're talking about this digital transformation. There is a reason they're all moving onto DLT technology. And, in a lot of these cases, the DLT technology is in fact RippleNet. Wrath of Kahneman down here saying, there is even a possibility this connection would involve ODL as the original document, noting the SADAD integration mentioned XCurrent. And if you guys remember, Ripple did have a suite of products before they relabeled XRapid ODL, and XCurrent was one of those products. Now, XCurrent did not utilize XRP, but again, this tweet was he retweeted out this from 2018. The original docs have been moved, so the best case scenario is that Al Baraka Bank will enable XRP via the use of ODL through UAE Exchange and ICICI Bank. Worst case is that Ripple integration never came to fruition, so nothing is happening. Also note that Al Baraka is an Islamic bank, and I mean, since 2018, Ripple has been making waves in the Middle East. So it would not surprise me if it was in fact running on RippleNet. Anyway, wanted to thank the Wrath of Kahneman for that. Also saw this guy's from Mac Attack XRP on Twitter. Ripple CTO names 3 things that went horribly wrong with FTX. So David Schwartz is also weighing in on the FTX scenario, which would in fact lead us to believe that cryptocurrency could see another decline in price, maybe chopping sideways for a while before we see that next uptick. So first of all, he says that Alameda Research, a trading firm affiliated with FTX, used FTX customer funds. Secondly, he says FTX's customer deposits, which were supposed to be used by Alameda, became commingled with those assets that were used for making risky bets. FTX ex-CEO Sam Bankman-Fried now claims that the assets were mixed up unknowingly, denying committing fraud. And finally, he says that Alameda did not manage risks at all, even though the firm was supposed to implement risk-managed, nearly delta-neutral strategies. How can anyone not be appalled at this incompetence/fraud? David Schwartz asks. So David Schwartz just noting 3 red flags here. The other thing I wanted to touch on briefly was this blog post put out by Coinbase, okay? Switch to the trusted and reputable digital dollar USDC. So it looks as though they're starting a campaign to get people to move off of Tether and onto USDC. They say down here, okay, now more than ever, stability and trust are of the utmost importance for customers. Fiat-backed stablecoins provide customer stability and confidence during times of volatility. However, the events of the past few weeks have put some stablecoins to the test, and we've seen flight to safety. We believe that USD coin or USDC is a trusted and reputable stablecoin, so we're making it more frictionless to switch. Starting today, we're waiving fees for global retail customers to convert their USDT or their Tether to USDC or their Circle. We co-founded USDC in 2018 with the vision of creating a more open global financial system. USDC is unique in that it's 100% backed by cash and short-dated U.S. treasuries held in U.S. regulated financial institutions. So guys, we're seeing the campaign start now too. Tether is now under the microscope. Some are projecting that Tether could be the next to fall. And so, I wouldn't put it past the people up there at Coinbase or, other high up executives in cryptocurrency that have their thumb on the pulse of the market, realize that another cataclysmic event would in fact turn the market down further. So maybe this is a bit of a damage control effort before the damage actually occurs from Coinbase to get, to get their users to move from Tether to USDC. Now, I don't know. I know some of you guys probably do use Coinbase who are listening to this right now. I guess Coinbase does support both Tether and USDC. So, if we think about it, if there was in fact a collapse of Tether, it would behoove Coinbase to, to kind of put this warning signal, these, warning shots out before that kind of thing happens so that they're not bombarded with all kinds of requests later when in fact, people are panicking because now their Tether is worth nothing. Think of the Luna stablecoin, right? And how that got depegged from a dollar value very quickly in and around the time of the Luna collapse. So guys, are we seeing more indications that is about to hit the fan? I've been in this space for a long time, this coming from David Schwartz, and I've seen a lot of examples of contagion, both in the crypto space and outside of it. I'm talking about cases where one company or project fails spectacularly and it triggers a number of other things to break. So David Schwartz posted this last night around 8 p.m., 20 after 8 p.m. on December the 8th. First, this example here, he talks a little bit about BTCST and how that collapsed. At the time, there were quite a few Bitcoin lending operations going on. Pirate was offering yields greater than 10% per week. Of course, responsible lenders weren't charging anywhere near that much, so it made sense to borrow Bitcoin at 10% per month to invest it with a guaranteed return of 10% per week. Lenders even made people agree they would not invest in this current scam, but they did it anyway. When BTCST collapsed, a lot of people had to choose between cashing out their retirement accounts and defaulting on their loans of magic internet money. Of course, they chose to default, and we have an example here of contagion. So David Schwartz just giving us another example of how this occurs. He also mentions the Celsius situation and how that has even triggered more harm in the crypto space. The one tweet thread that I really wanted to get to from David Schwartz was this one, okay? And I mean, I'm looking at this and I'm thinking to myself, is David trying to tell us something similar to, is Coinbase trying to tell us something here? David posts this, okay, when you buy an asset in the expectation of it appreciating in value, whether it's a security, a commodity, a collectible, or whatever, its present value and everything built into that doesn't matter. You get 100% of the value that you buy, but you pay 100% of the value of that too. That constant will have no effect on your gains or losses. All that matters is what can change. If what goes into its value changes, say increasing by 10%, then you will make a 10% profit. If it goes down, then it will decrease by 10% and you will take a 10% loss. This leads to some counterintuitive conclusions, however. For example, if you think Bitcoin will explode in the future, understand that you are paying for that belief. It's built into the price you pay. So this is an interesting theory here. If people didn't think that, the price would be lower and you would get more Bitcoin for the same money. What matters when you buy an asset for speculation is what will change over time. Will it get better or worse? Will its value grow or will it shrink? Poor present value is a plus. It means you pay less for the same amount of expected future growth. When you look at buying something as an investment, particularly something that doesn't produce a revenue stream just from holding it, what matters is how you think its value will change, not what value it has right now. So a few things here come to mind when unpacking this David Schwartz tweet thread. Obviously, he's talking about value and, more importantly, cryptocurrency. If you see that something is going to increase in value in the future and you can get it at a discount today, perhaps maybe he means an XRP at 39 cents, then you're definitely getting a deal, especially if you think the value proposition is going to increase as time goes on. And when comparing this to Bitcoin, he's saying Bitcoin, there's already the price speculation in Bitcoin. The fact that it is already trading at about $17,000 mean that people already think that the price is going to go up. Otherwise, you wouldn't see Bitcoin be trading at such a high price. So is David Schwartz suggesting that XRP right now is flying under the radar and that, we are going to see exponential growth in 2023, or at least growth come slowly and then maybe at a certain point just kind of explode? So some in the XRP community are speculating on David Schwartz's words, like Jack the Rippler here. In other words, HODL XRP, Eggrag Crypto down here saying simply, value doesn't change based on the nature of the asset and what this asset can produce in retrospect to its holders. In simple English, utility and a store of value. Vor down here saying, so invest into a speculative company that has produced revenue year after year and possibly have a real world connection of usage. Got it. But I think Appalachian-born Beachbound hits the nail on the head down here, and she says this, okay, this sounds a lot like a do not panic post. I think it is going to go down maybe to 12 cents and not to fret because we are banking on the potential endgame of knowing what we hold. We know in the past, guys, David Schwartz has posted tweets that have eerily coincided with market turns. Even just recently, I did a video where David posted a tweet that could be interpreted as a signal that the market could go lower. And guys, I'll link that up here in the top right-hand corner. And this tweet also sounds very similar. So is David Schwartz essentially telling us XRP is at a discount? HODL XRP for real-world future value? Let's not forget what Brad Garlinghouse said at Mainnet 2022.
Holding back crypto at large is tribalism. I mean, Ripple has invested in over 60 companies. We've invested hundreds of millions of dollars, close to $500 million, at about 60 different companies across the crypto landscape. Some of them are involved with XRP, some of them aren't. I truly believe all boats can rise, and I think the whole industry, frankly, needs to stop taking shots at each other and try to support each other and try to actually help people be successful.
All boats will rise, according to Brad Garlinghouse, and the fact that Ripple is investing not only in the XRP ecosystem, but in the entire ecosystem means that, in my opinion, there are a handful of cryptocurrencies. The chances of them doing well are very, very high. The beauty of that is that list definitely includes XRP. So could another market downturn be in the cards? And is David Schwartz saying maybe now's the time to buy? That's just my opinion, but I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.